Klarna just popped to $52, but wait, it's sliding back toward its IPO price. What a wild first day. But the real story? It's all about BNPL defaults lurking in the shadows. Stick around to see why credit risk is the key to this stock's future. Will Klarna bounce back or face a tough road ahead? The answer could change everything for investors.
Okay, well, moving on from the AI space, and we're going now buy now, pay later, going public. Klarna's, their code is KLAR IPO, opened on Wednesday the 10th, raising $1.4 billion. Now, we're talking about Klarna here, which is a Swedish company, which has actually had a lot of history here in Australia because our largest bank has integrated with Klarna, and you can get Klarna via their banking app as well. And they've done very well out of this IPO. So let's have a look at it. And how does Klarna's market value exceeding $17 billion at close reflect investor sentiment towards the buy now, pay later sector?
Well, so first of all, worth pointing out, that's a pretty heavy valuation for a company that's like this whole buy now, pay later thing didn't exist just a few years ago. So they've built this up out of nothing. And, what we saw was that when the deal was announced, priced, the guys who priced it actually got it right. The stock shot straight up, and 2 days later, it had come down to very close to the IPO price. So basically, it went up, it came back down, but settled right around where they priced the deal. So good job by the investment bankers there. My bigger concern is that the buy now, pay later payment plan with Klarna leading the competition, it just leads to poor credit decisions. It's something we've talked about a lot on the 5 things. And Phil, I know you focus a lot on educating people. There is this sense that, oh, well, it's free. Trust me, it's not free. These companies make their money one way or another, and they're going to make their money off of you. I've also seen data that says some huge percentage of young people, and it's primarily young people using buy now, pay later. They buy something using it, and then a month later, they're shocked when they get a bill. And to me, this is inconceivable. Like, you thought because you didn't hand the person cash at the store that it's free, but apparently that's what they think. And then they're shocked when they get a bill. Well, guess what? This is all going to lead to poor credit decisions. You don't pay your bill. Somebody's going to take money out of your pocket. And, we're just seeing this increase in credit usage combined with an increase in non-performing loans, right? I mean, it just leads to bad decisions all the way around.
I think the perception is among many young people that it's better than getting a credit card because you're not paying those high interest rates, and that somehow that they're on their side because they're doing such strict credit reporting or credit research on you as a user that they know if you're going to get into trouble. And basically, if you do get into trouble, your credit is cut off immediately. And the idea that a company like Klarna is actually on your side as a consumer much more than a bank. But all this, it's all perception stuff, really, isn't it? There's nothing really, really solid about the whole business model of buy now, pay later.
Yeah, Phil, the idea of assuming that the person who wants to loan you money is concerned for your financial outcomes and that they will know what is best for you. This is the equivalent of saying,
we laugh at this.
Right. Yeah. This is the equivalent of saying, I no longer go to my doctor. My crack dealer takes care of my health concerns because he doesn't want me to die. He wants me to keep buying from him. That is completely insane. The idea that I don't need to make any financial decisions. The people who lend me money will know what's best for me and will know how much I can handle. No, you need to be responsible for your own decisions. If you make bad decisions, you're going to have bad outcomes. And look, I get it. From the point of view of a lot of these young people, they've been lied to their whole lives. They were told, go into debt to get a university degree. Don't worry, it doesn't matter what it's in. You can get a useless degree and you'll be fine. But they're finding out the job market doesn't value certain degrees, and having 5 and 6 figures of debt is a problem. They were told, just work hard, you'll be fine. But the truth is, it's going to be very hard for them to buy homes. They've been priced out of the market. And the reason for that is because the United States overspends. And so, the same system that's telling them, hey, you need to be careful and look out for your finances. It's our government that's spending insane amounts of money and creating the inflation that's making these people's lives miserable. we shouldn't just pick on them, Phil. And these may be bad decisions, but it's worth pointing out that an increasing amount of buy now, pay later business is for groceries, right? It's easy to make fun of the person who says, I'm going to upgrade my iPhone 16 to the iPhone 17, and here's $1,500 for it. And for a phone that's very, very similar. But when people are using it for groceries, you have a bit of a systemic problem. And so it's really easy for these people to say, wait a minute, nobody around me is making good financial decisions. The government isn't. I'm suffering from inflation caused by their overspending. How am I the problem here? I get that. And there's no part of this that's fair, that's equitable, that, they've just been lied to their whole lives, and it's all horrible. I still say, do not count on Klarna or your credit card company to tell you how much money you can spend. You need to be responsible for your own decisions, whether it's fair or not.
So despite from that, as an investor, what are your thoughts on Klarna? Is it fairly priced, and does it have a future?
Well, it definitely has a future. Fairly priced, I don't know. I didn't look at it, and I'm not looking at investing in it. And that's for two reasons. The primary reason is their non-performing loans, I think, are increasing. It's a problem. Listen, it's one thing to say it's scary when people are using buy now, pay later to buy groceries. But, they're also using it at Chipotle. Like, they're financing a burrito. Okay, this is a problem. You can't repossess it. I think
it's incredible the number of places you can buy now, pay later. It seems extraordinary, for something that's worth $5, $10.
Yeah, exactly. Yeah. And so, look, I think they're going to be looking at higher losses. These are things that can't be repossessed. It's not part of their business model. They've got it. Like, they write something off, they're writing off 100% of it. I think they have a customer who doesn't really understand what they're doing. They don't understand what they're buying or what they're financing. I just see this as a problem. In addition to that, one of the things we've talked about an increasing amount on this show is that stable coins are going to be a huge attack on the banking system. I think it's going to affect companies like Bank of America, or Citi. I don't know what it's going to do to buy now, pay later. I don't know that they may be competing with each other. That part isn't clear to me yet. This is the kind of thing that I want to watch, not put my capital in right now.